Stock tip. Best stock setups.
Welcome back again to a new episode of Stock Tip Daily Update. As you might have seen yesterday, there was a holiday in the US. The Americans have celebrated Memorial Day and the markets remained closed. But today we got to see our favorite hobby again, and then, well, nothing much happened today. Actually, the markets remained pretty much neutral here, with a sideways move in the S&P 500 and the Nasdaq, also in the IVM, so nothing much happened. The question remains, what's going to happen? Is this short bounce here going to, or rally going to continue? Is it going to turn into a big rally, and are the markets going to continue? Or now that we've pretty much reached this next Fibonacci level, that's 23.6 here, we're going to turn back south again and continue our downtrend. So nobody can say. Actually, if you, by the looks of the intraday chart, this might just look as a nice consolidation, perhaps following one or two sideways days. So we might just be able to break out again and reach the next level here, 4,400, 4,500, like we see in the weekly chart. So by the looks of the weekly chart, we are still in the green here. We've reached Fibonacci level 38.2, and then we had a very big convincing green candle in the weekly chart, and the next one could be just as well. So we might be in for a nice rally here, and we might be looking for 4,300, 4,400, or even 4,500, if not the real thing. For the real thing, there are some arguments here in the Nasdaq. We've reached 200 moving average in the weekly. The less times this thing happened, so here in 2015, 2018, and 2020, every time this happened, we've seen a nice bounce in the market, and the market rallied, and this is what last week or the week before happened. So this is the strongest argument for a rally in the markets right now. Sadly, this didn't get to happen in the S&P 500 like we wished for, but with a bit of luck on our side, this is enough to get the markets moving, and we might see this rally continuing or starting, seriously starting. My strategy remains all the same. That's why I decided to go long here. This was the setup I've been giving you. I've given you this one, and here is the point where I decided to go long, and I'm at the moment 60-70% long, and I will remain so until we get some definite points here in the other that the market has decided to go south again. So for the time being, I decided to remain long and to stick to my initial strategy and hope for the best. But if you do get some definite signals that the market wishes to go back again, then who am I to stay in the to stay inflexible to such signs? So I shall go with the flow, and for the time being, the flow seems to point north. The IVM, pretty much the same story here. So the IVM is the best point to look at the Fibonacci retracement and what this offers. So this is nice for learning here. So this was the Fibonacci retracement starting with the 2020 pandemic crash, and ending with this high here. Then you see us maintaining this Fibonacci level, the 23.6, the whole time for the course of a year or so, then falling to the next level to 38.2, bouncing back again to 23.6, falling again, bouncing back again to 23.6, falling again to 38.2, and then continuing falling. So here was another small bounce, but we continued falling to the 50 Fibonacci, and then Right now we've reached that 38.2. So this was the best point to learn about the Fibonacci retracement and the resistance and the support lines it points to. So very nice run in the for the Fibonacci here. So who is a fan of the Fibonacci couldn't get a better example than the IVM now. The DAX also aligned with the rest of the markets. We see here nothing nothing much. So after breaching over the 50 moving average, a bit of a consolidation here. It looks pretty good. Euro to US dollar minus 0.2%. It was more at one point, but it finally stabilized, and this also looks like a bit of a consolidation after breaching over the 50 moving average. So overall, the markets seem to be taking a breath of air. The only question remains is if the bulls manage to remain in control, or if this breath of air looks like a weakness, and the bears are ready to try and take over again. So this is something that we are bound to see this week, definitely this week, if not tomorrow. Let's just be patient and see what's going to happen. Oil had a bit of a push today with a gap up, but it got sold, so we finished with plus 0.2%, so not much. Everything got sold out. This was this gap represents the European agreement for an oil embargo, something that looks like an oil embargo, but you pretty much know it's nothing of the kind. So it got sold off pretty quickly. Gold and silver remain very weak here. So in the weekly, let's go to the weekly. So in the weekly chart, it remains pretty weak, and minus 1%, respectively minus 2.5% in silver. So it remains very weak, and it's definitely not that shiny at the time being. Okay, now for the second time in a row, I've given you NOC as a setup of the week. And I'm showing you why. If you take a look at the daily chart here, you see a breakout, and this makes for a nice pullback. So I actually use this weakness we've seen today to buy myself in. My stop is somewhere at 455, 456. Don't know exactly, but I bought myself in, and I think I bought it at 462. Somewhere here. Let me take a look at it. So 462 or something like this is the point where I bought it, and pretty happy with this. So this is the setup of the week I remain with, and now I'm also invested in.